Hi, what up, what up, what up? Today I'm going to be actually reviewing the strategy I personally use to get funded with $250,000. It's all documented on my channel. I'm going to just show y'all some proof right here. So we have Effectify right here. Uh, we have phase 1, phase 2 funded right here. And currently I'm taking a 200K account that is documented for my overall 500K challenge series. So if you haven't watched that, go ahead and check that out. And just for transparency, let me refresh the page. See, and we have 5%ers right here. This first account right here was disabled. That's when 5%ers was moving platforms from Medicals to Match Trader. And then this is my funded account right here, active. Right here, this is the first two, what's it called, challenges and stuff like that, all documented on my channel. This is not a challenge account, it's an instant funded account, but the thing I did like about this is I did have this account for about a year. It's a $50,000 account, and let me just refresh the page for y'all so y'all can see that I still have this account and everything. And yeah, if I end up losing this account, I can't get another account because they don't accept US clients no more. So if y'all wondering, like, yo, how do you handle trading all these accounts at the same time? You said you had multiple funded accounts. You said you're trading challenges on top of this. So how the hell you trading all these accounts at the same time? Right here, Traders Connect. Traders Connect is really easy for me to just trade with all my accounts at the same time. And all I have to do is just pick one account and add all my details, basically the account information, like the password, all that. Add the details for my other accounts as well, and they will all pop up on my dashboard. And when they all pop up on my dashboard and everything, I'll connect it to my main account. So whenever I place one trade on one account, it places it on all the other accounts as well. So, check out the link in my description if you want to try out Traders Connect. I actually do enjoy them. I actually personally use them, and I think they charge around like $10 per account. So yeah, the time frames I use is I use a 15-minute time frame for my entries. I use a 1-hour time frame. Then I use a daily, and then the weekly time frame to just establish the overall direction. I don't trade ICT. I don't trade SMC. I don't trade support and resistance. These concepts. My mentor is Mentor Effects. Shout out to you. It helped me become profitable. I was a student with him back in 2022 and stuff like that. There's gonna be just a slight difference with how I view it versus him. Most of the entries that he take, I may call it invalid, and it's just all about the trader, and that's what you got to realize. So the weekly time frame, what I do is establish the overall direction right here. I just established the overall direction on the weekly time frame. And how do I establish that? By looking at the breaks of structure on this indicator. This indicator is called the Mentor Effects Structure Indicator, and it basically shows you the highs and lows of the market, as you can see right here, right? Pretty self-explanatory. This is all I want to see on this higher time frame, as price is like just trending higher, right? Next is the daily time frame. So this is if I'm entering on the 15-minute time frame. The strategy works with all time frames. You're just gonna have to use different time frames that is appropriate with that time frame as well, right? On this daily time frame, what I want to see is a cycle, right? And what do I mean by a cycle? I mean, like, all right, before I talk about the cycle, let me talk about how I view structure. So I view structure like this. If we have at least 2 breaks or more, anytime we get a break of a low, I'm automatically assuming the target wants to is for the high as price starts to push up like this, right? And the reason why I assume that is because structure needs to happen on all time frame. So that break of the low right here is just a higher time frame structure happening. So let's say if this was a 15-minute time frame right here in red, right? This whole thing maybe is like a 4-hour structure being formed, and so on and so on, right? So let's see, how can I want to do like just a random point, and y'all can test my strategy if y'all want to. Let's just do something like this, right? So we're on the higher time frame, so we have multiple breaks of structure, right? Go on the daily. What you want to see is when the cycle. So another thing is when price moves under the MAs, right? And then we clear the highs like this. That's the first stage of the cycle. And what do I mean by that? So let's just give these some names. So when price gets under the MAs, let's just call it, we're gonna call that the flush, right? Then when price first clears the high right there with the indicator, we're gonna call this the first break of structure, right? And we're just labeling it as we go, right? So the first break of structure, usually you're gonna notice that we're gonna have at least 4 to 5 of these break of structure, and then I will stop watching price because it may start to fail, which is that flush we get where it flushes under the MAs or either breaks a potential low. So it can flush under the MAs or break a potential low. Either way, the flush of the MAs is gonna happen. Whether it breaks the low or it doesn't when it's about to set up. All right, that's what I mean. So once we have that, it's moving nicely, and we can expect further bullish price action. That's when we go on the 1-hour time frame to see what's happening. And you're gonna see everything is fractal, right? So we have a break of structure. We have a break of structure. We have a flush under the MAs. So basically, the daily time frame and the 1-hour time frame, we're looking for the same thing. So what I want to see is basically price to start to get back above the MAs and clear this overall high. So this is going to take a lot of patience. So we're just staying out of price action, especially since I don't like huge ranges like this. Okay, so now that we got that break of structure, right? We got a break of structure right there. And simply what I would want to wait for is price to come down against that 10, which is that black line, or 20. But it can't. It has to come down nicely. It can't have a huge sell-off candle or nothing like that. That's just no volume right there. What's going on? I hated how price looked right there, and then it continued. So we can just label this right here. So we have a flush. So remember, when it comes up under all the MAs, that's the flush. We could call this the first break of structure. And then we're just waiting. So price came against that 20, which is that red. And as soon as price comes against that 20, right, I'm assuming price potentially may want to target that high, right? Because of the cycle. We flushed, we cleared the first break of structure, right? And like I said, price potentially makes 4 to 5 before failing back down. So what we're going to do is go on our entry time frame. And what I want to see on my entry time frame is for price to come to this 50, either close to the 50 or flush all the way under the 50. So you're going to be mind blown because this is fractal right here. So just like the higher time frame, we flushed under all the MAs. So what we want to do is wait for our setup. So the setup is basically we have a move up. So I call that the impulse. We have a small pause. So at least one candle that pauses before taking out the high. I'll set a buy stop and potentially we can manage this for catching a potential trend, right? Or you could call this buy stopping structure, buy stopping demand, because all this is demand, buy stopping the creation of demand being formed. And if it's a true trend, it's really not going to come back to it if it's really going to run and run and run. All right. And if that doesn't happen, we just walk away. So it flushes under. So we're waiting for it. All right. You see this right here? We made its way above once. Let's highlight this. We made its way above once. And it's important to look at how it's forming too. So we're waiting for one pause. And you see how it just flushed right under it again? I don't like that. I want it to reject nicely. If it had rejected nicely with this candle, I would have set the buy stop. And if it failed, I would cancel it. So if it fails, there's nothing to do. And then we jump back up to the higher time frame and see what it does. If completely went under the this whole thing, this 20 right here. So I will consider this as a whole flush, and I will wait for the cycle to repeat itself, where I will wait for the actual clear of the high. I'm going to pause on the MAs like that, just like that, where it had that pause. It came close to the 50 right here. As price makes its way above, this wouldn't be a bad opportunity right here as well if I ended up taking this, and I have no idea how it might do. And then simply what you want to do is just manage it, because it's not about how much, like if you win or lose the trade, it's about your management as well. And then something like this, I would close the trade right here. So basically my management is pretty simple. I will close the rest of the trade if price ended up breaking that 20 right here. If it breaks the 20, I'll close the trade, move on, because it's not likely to push. Because from my experience, all my nice wins, they usually just go. And if they ever did end up tapping my entry where it came up, it's likely to just tap right here. If it really wanted to win, it will just tap the entry once and then start making its way back up, and so on and so on. But I like my strategy is because the reason why I like my strategy is because whenever I'm wrong, I can quickly cut my losses. On average, it's about half, right? And then when I do win, I could potentially manage for a large runner based on the overall trend. So that creates a very, very huge advantage for a system, because I don't win a lot. My win rate is, bad quarter around 30%. During a good quarter around 40%. But I can still receive my payouts consistently throughout the year, and that's from me managing on my trades, managing my emotions, and following the rules that I tested for myself.